Donald Trump's big, beautiful tax bill just passed, and there's been a lot of talk and a lot of opinions about everything. But just put that all to the side, and if you are a content creator, influencer, small business owner, I've gone through the bill and I've picked out some things that I think are the most important things for you to know and how that's going to affect you come next tax season, because this is now the new law. So let's jump into it and go through it. My name is Cameron and I run BizBud. We help small businesses, content creators, influencers, and digital nomads win at the tax game so that you don't pay more than you have to. In this video, we're going to talk about the big, beautiful bill and how that applies to you. And hopefully you don't fall asleep through it, because we'll try to make it entertaining and easy to understand, because it is a huge thing that I've gone through and looked at, so you don't have to. So number one of the biggest things that changes that coming on is that 1099 deduction that has been increased to $2,000 from $600. So basically, if you didn't know what a 1099 deduction was, watch our other video about that. We go in depth about that. But basically, if you paid anyone on over $600, you had to issue them a 1099 form, and it was super annoying and super big hassle. You had to file forms, you had to pay someone to do it yourself, and you miss it, there's penalties, and it's just a disaster, especially if you pay a lot of people and have a lot of contract workers, because it's specifically for contracted services, contract labor, and reality, $600 is nothing compared to especially what the government's spending. So it's just a lot of headache and reporting for such a minimal amount. Now, okay, $2,000 still isn't that much, but it's better than $600. So now, instead of anyone you paid over $600, it's anyone you paid over $2,000. So if I'm a photographer and I'm shooting a wedding and I hire a second shooter for a wedding, I pay them $1,000. I don't need to issue them a 1099 at the end of the year. So that saves me paperwork, it saves you paperwork, it saves everyone headache, stress, anxiety. So that's the biggest one. So you guys can take a breath there. It'll minimize some of your fees from 1099 time, because that's in January, they're due in January. So remember that. Number two is it extended the QBID, or the Qualified Business Income Deduction. That deduction, which is 20% of your net income, so before taxes. So if you're a business owner, let's say you had, after all your expenses, you had $50,000 of net income, you would get another deduction on the individual level of 20% of that as a deduction. Now, so that means if your AGI was 50,000, you basically get $10,000 off, 20% of that. So now you're paying tax on $40,000 instead of $50,000. So that has stayed in place. It was going to phase out and no longer be a thing. So that's great. And that's if you're filing single. So that's another one that's awesome. You still get to be taking advantage of that. If you don't know what that one is, you haven't been taking advantage of it, make sure you get a new tax preparer or talk to us. We'll help you with that. Number three is bonus depreciation. So bonus depreciation applies to mainly real estate investors who buy a rental real estate, and you can get 100% depreciation. Depreciation is taking an expense usually over the life of the property. So typically in real estate, that's 27 and a half years. But basically, if you do a cost segregation and you pay someone to basically cut up your property into different buckets, anything that's under 20-year property useful life, you can take that expense all in the first year. So what that means is basically a house has different parts. You've got the foundation, you've got the cabinets, you've got the roof, you've got the lights, you've got the doors. Basically, you come and get someone to break those, what makes up a house, into different categories of stuff, essentially. And so you've got things that last more than 20 years, you got things that are 15 years, 10 years, 5 years. Anyway, anything that is designated as less than 20 years, you can take all of that expense in the first year. Typically, that comes out to 25 to 30% of a house, of a rental property you buy. So if you buy, let's say, $100,000 property, which, okay, that's super cheap, but for number's sake, let's use that example. You can basically write off at 25%, $25,000 deduction. You can use that to offset other income, depending on your AGI. That gets a real estate professional. That's for another video. But anyway, that's a powerful deduction. It has stayed. It was going to phase out. It was going down to 80%, 60%. Now it's stayed and it's back to 100%. That's a big one. And then bonusly, I'm sure you've heard a lot on the no tax on tips. Typically, that doesn't really apply to if you own your own business, but if you are a salon owner or you have employees and you're giving them and they get paid tips, so think if you own a salon or your restaurant, something like that, then they don't have to pay tax on those tips up to 25 grand. Now they still have to pay Social Security and Medicare tax, which is around 7.65%. So you're not out of that. And then maybe some state taxes, it depends. But that's nice. They don't have to pay tax. So basically, if you pay your employee 50 grand and then they get tips of 25 grand, they would still, it actually is causing more of a problem for the employer for speaking from the business owner side, because now you have to report that on the W-2 that they got paid 75 grand, but from the individual side, they're not paying they basically are only paying federal income tax on the 50 grand, not the full 75. So that's nice. So you can go around and try and get customers to tip more. It does phase out at 150 grand of income. So there's that if you're more of a high end and killing it. But in October, they are going to add provisions to what other industries that applies to. So let's hope for the best there. But yeah, I just wanted to make this video about things that still apply. The main things that still apply to you if you're a content creator, influencer. It does apply more to, it's a huge bill. It's got a lot of things like the Trump accounts. If you have a kid, it gets $1,000 credit into an invested account that you don't have to pay tax on. There's the QSBS, the Qualified Stock Option Business. There's the QSBS that is extended for those who still invest in shares in a C Corp, and if you hold it for more than 5 years, you don't pay tax on that. So that's great. And there's a million other things that don't always apply. Section 179 deduction was increased to around 4 million before it phases out. So there's things that apply if you have big businesses, but I wanted to keep this about small business owner, individual, content creator, digital nomad, people like that. So yeah, if you got value out of this, if you want to know more info or you want help implementing this on your tax return strategies, then reach out to us. We're here to help. And if you got value out of this video, then like and subscribe, and we'll see you in the next one.